Welcome back to the channel, fellow finance enthusiasts. Today, we're diving into the consumer cyclical sector, specifically focusing on the specialty retail industry. Buckle up as we go through some major players: Best Buy, Tractor Supply Company, Ulta Beauty, and Williams-Sonoma. We'll cover all the key financial metrics and uncover some insightful details on what makes each of these companies tick in the current market. Let's kick off with valuations using the price-to-earnings ratio, a metric that gives us an idea of how much investors are willing to pay for each dollar of earnings. Best Buy is currently trading at a trailing P/E ratio of 14.15, which is below its 5-year average of 12.09. With a forward P/E of 13.53, it suggests that the market is cautious about future growth, even though Best Buy is known for its consistent performance and attractive dividend yield. In contrast, Tractor Supply Company, a favorite among rural and suburban consumers, has a higher P/E ratio of 26.53, with a 5-year average of 23.51. Its forward P/E of 24.53 indicates that investors expect steady growth, but are also paying a premium for its resilience and rural-focused retail business model. Continuing, Ulta Beauty, known for its dominant position in the beauty and cosmetics industry, has a trailing P/E of 14.98. This is below its 5-year average of 20.79, showing that it may currently be undervalued. Its forward P/E of 16.37 reflects confidence in its future growth, even as it faces strong competition in the luxury beauty segment. Finally, Williams-Sonoma, a leader in high-end home goods, has a P/E ratio of 16.18, slightly above its 5-year average of 13.52. The forward P/E of 16.52 indicates that the market views Williams-Sonoma as a steady performer in the home goods industry, where quality and brand reputation hold high value. When we factor in the price-to-earnings growth ratio, which adjusts the P/E ratio for expected growth, we see some interesting contrasts. Williams-Sonoma shines with the lowest P/G ratio of 1.62, suggesting it might be undervalued relative to its growth potential, while Ulta Beauty has the highest P/G at 4.10, signaling a premium valuation due to its projected growth in the cosmetics sector. Insider ownership often signals how much faith the leadership team has in their company's future. Best Buy stands out with a solid 7.96% insider ownership, which shows high confidence from the company's leadership. Tractor Supply and Ulta Beauty have lower insider ownership at 0.29% and 0.25%, respectively. This could indicate that these are well-institutionalized companies with diverse shareholder bases. Finally, Williams-Sonoma has a respectable 3.8% insider ownership, a positive indicator that leadership sees potential for long-term growth. Profitability metrics help us understand how efficiently each company generates profits. Best Buy shows a return on equity of 42.41% and a return on assets of 8.14%, showcasing its ability to generate profit using shareholders' equity effectively. Continuing, Tractor Supply impresses with a 50.58% return on equity and a 15.39% return on assets, demonstrating high profitability and efficiency, which align with its strong rural and suburban presence. Ulta Beauty leads in return on equity with 54.98% and a 22.02% return on assets, showcasing its efficient use of assets to drive revenue in a high-demand industry. While Williams-Sonoma tops the list with a return on equity of 55.96% and a return on equity of 22.14%, indicating impressive profitability and effective management of its capital. In terms of return on invested capital, Ulta Beauty again leads with 39.61%, followed closely by Williams-Sonoma at 36.5%. High return on invested capital is a good indicator of these companies' ability to generate value beyond their cost of capital, a big plus for long-term investors. A company's share count can greatly impact shareholder value. All 4 companies have been reducing their share counts over the last decade, increasing the value for their shareholders. Now let's talk about earnings per share or EPS. That is a key indicator of profitability on a per-share basis, showing how much profit is generated per outstanding share. Best Buy has an EPS of $6.55, with a projected 4.17% compound annual growth rate over the next 5 years. Tractor Supply has an EPS of $10.28, expected to grow by 6.69% compound annual growth rate. Continuing, Ulta Beauty boasts an EPS of $24.92, with a 3.65% expected growth rate. while Williams-Sonoma has an EPS of $8.33, with a projected 10% compound annual growth rate. Over the past decade, all four companies have had an impressive double-digit growth, leading the pack Ulta Beauty with its 22.68% compound annual growth rate. Williams-Sonoma follows very close with a compound annual growth rate of 19.63%. The free cash flow per share evolution paints an optimistic picture for long-term growth potential. Ulta Beauty leads with an free cash flow growth of 27.58% compound annual growth rate over the past decade, while Williams-Sonoma is close behind at 22.45% compound annual growth rate. Both companies have demonstrated their ability to generate significant cash flow, which can be reinvested to fuel further growth or return to shareholders. Dividends can be a big attraction for income-focused investors, so let's look at what each of these companies offers. Best Buy has the highest dividend yield at 4.06%, with quarterly payments of 95 cents. Its dividend growth rate has been an impressive 17.4% compound annual growth rate over the last decade, making it attractive to dividend investors. Tractor Supply provides a 1.61% yield with quarterly payments of $1.10 and a dividend growth rate of 20.47% compound annual growth rate. Its strong dividend growth aligns with its overall growth story, adding income appeal. But be cautious because during these last years its free cash flow payout ratio is very close to 100% despite next year expected an impressive growth in free cash flow. Ulta Beauty, on the other hand, currently does not pay a dividend, but with a free cash flow payout ratio of around 60% like Best Buy, it could potentially introduce a 3.28% dividend yield with quarterly payments of $3.06 in the future. Finally, Williams-Sonoma offers a 1.69% yield, with quarterly payments of 57 cents. The dividend growth rate has been a solid 10.45% compound annual growth rate over the past decade, showing commitment to returning value to shareholders. Operating and profit margins give us insight into a company's efficiency. Best Buy has an operating margin of 4.2% and a profit margin of 2.96%. These modest margins suggest that, while profitable, the company faces pricing pressure and competition. On the other hand, Tractor Supply boasts a modest 10.04% operating margin and a 7.53% profit margin, which are strong for a retail company and highlight its operational efficiency. Ulta Beauty with a 14.03% operating margin and a 10.68% profit margin, showing it has carved out a profitable niche in the beauty industry. Finally, Williams-Sonoma tops the list with an 18.33% operating margin and a 14.29% profit margin, signaling its strong pricing power and effective cost management in the high-end home goods sector. Let's see how each company's revenue and earnings have evolved over the past 8 years. Best Buy shows a flat evolution in revenue and earnings, which has been reflected in its market price. Over the last 5 years, it has underperformed compared to the retail ETF, RTH. Tractor Supply and Williams-Sonoma have both shown strong positive growth, reflected in their market prices. Both companies have outperformed the retail ETF, RTH, in the last 5 years, benefiting from their focus on niche markets. Finally, Ulta Beauty also saw very positive growth, though this hasn't fully translated into its stock performance. Its total return over the last 5 years has lagged behind the RTH ETF, suggesting some investor caution or pricing pressure in the beauty sector. Debt levels are essential to gauge financial health, especially in volatile markets. Best Buy has a debt/EBITDA ratio of 1.54 and a debt/free cash flow ratio of 2.92, suggesting manageable debt levels. Tractor Supply stands out with low debt, having a debt/EBITDA of 0.70 and a debt/FCF of 2.49, indicating it operates with minimal leverage. On the other hand, Ulta Beauty also keeps debt low with a debt/EBITDA of 1.04 and a debt/FCF of 1.94, reflecting financial prudence in the competitive beauty sector. While Williams-Sonoma has a debt/EBITDA of 0.86 and debt/FCF of 1.09, showing it's in a comfortable position to weather market challenges with low leverage. Now let's talk about stock performance and current market caps. Only Ulta Beauty has had some problems in its price while the other three have obtained an impressive price return during the last 52 weeks. All four companies have a moderate market cap, being their major players in specialty retail industry. Now, let's talk about the crystal ball moment, analyst expectations and fair values. Analysts have set varying price targets for these companies over the next 12 months. Best Buy has a price target of $103.91, representing an upside of 12.12% from its current price of $92.68. My fair value estimates tell a similar story. For me, Best Buy is close to its fair value at $102.91, suggesting it is undervalued right now. Continuing with Tractor Supply, price target is $288.31, which actually represents an upside of 5.7% from its current price of $272.77, indicating that analysts see the stock as potentially undervalued. And for me, Tractor Supply, with a fair value of $186.22, appears currently overvalued. Now, Ulta Beauty has a price target of $397.39, with an upside of 6.45% from the current $373.30. And for me, with a fair value of $370.75, can indicate a great opportunity to start adding this company. Finally, Williams-Sonoma's price target is $144.61, representing an upside of 7.31% from its current $134.76, with a fair value for me of $140.37, which is close to the current price and can indicate a fair valuation too. These valuations indicate that while there is some potential for growth, investors should tread carefully and consider these stocks' current pricing relative to their intrinsic values. In conclusion, Best Buy, Tractor Supply, Ulta Beauty, and Williams-Sonoma each present unique strengths and weaknesses. Whether you're looking for a growth stock, a dividend play, or a balanced portfolio pick, these companies offer diverse options to align with your investment goals. As always, it's essential to align these metrics with your own investment strategy. If you enjoyed this breakdown, don't forget to hit that like button, subscribe, and ring the bell for more in-depth financial analysis. Until next time, happy investing!